24 hours away from the Fed's next decision on interest rates. They are expected to hold rates steady at this meeting. But what about the rest of the year? Steve Liesman is here with the results of the CNBC Fed Survey.
Yeah, Kelly, it looks like our survey respondents think the market might be a little offsides when it comes to the Fed trade. First thing I want to show you is what's expected at this meeting and for the rest of the year. It's important just to check this off. 100% see no rate hike of our 45 respondents. 2.48, that's the Fed funds target expected for this year. Really no change from where it is now. And $3.5 trillion of the balance sheet.
Where are we right now? We're at the range of 2.25 to 2.5?
2.25, 2.5. So really right in that range there. And the $3.5 trillion on the balance sheet is pretty much with an expectation of stopping the third quarter. Next year is where it gets interesting, Ms. Evans.
But by the way, no rate cut is priced in this so far.
Right?
Okay.
Even though the Fed funds futures market is there, but not from our respondents. Now take a look. 33% expect a hike for this year, 11% a cut, 56% say it's on hold. So that tells you that the Fed's message of being on hold is really taking hold, at least in this group here. Next year, though, 58% say there's going to be a hike. What's the matter with these people? 33% are looking for a cut, 13% on hold. Art Hogan, chief market strategist, National Securities, writes in to the survey, I think one of the biggest surprises for 2019 may well be stabilizing economic growth globally and a fourth quarter rate hike by the U.S. Federal Reserve. John Donaldson, director of fixed income at Haverford, says the odds of a Fed rate cut are well overstated. The most likely course is no policy action, neither a cut nor an increase. In this group, Kelly, I think significantly is more upbeat on the economic outlook, perhaps, than your average fixed income trader out there.
Exactly, than the bond market participant.
Right, exactly.
We'll explore this more in a moment. Also wanted to ask you, you asked them about Stephen Moore and how likely they thought it was that he'd be approved to the Fed board.
Yes, Stephen Moore not doing very well in our survey. I think these are his peers or not, I don't know, but 63% say the Senate should not approve Stephen Moore. 28% say that they should. And the reasons are 69% say he's too political, 62% say he's not qualified, and 50% say personal issues. Now, of course, people could answer more than one, which is why the percentages are higher.
Yeah, I can do that math.
These are among the, right, you know something's wrong. These are among those who say the Senate should not confirm him.
Okay.